I want to begin. I'm going to now recognize myself for 5 minutes for the purpose of asking questions. I want to stage set because I think it's really important that we're talking about why we're crafting legislation for digital assets market structure a little bit in the first place. I want to start with you, Mr. Sierra, if I can. Who's involved? I'm going to walk this through in 3 stages. So who's involved in that early phase to get projects off the ground? Are there founders, engineers, lawyers, investors, community leads? Is that kind of the broad structure of who's involved?
Thank you for the question. When I usually get the first call or email, it's from a couple of developers that have a new idea to develop a new protocol. And the first decision that we go through is where are we going to form a legal entity? What structure is it? Is it in the US or elsewhere? The second question is usually how are we going to finance this, right? There are 2 basic approaches. Most projects will raise funds from venture capital funds. Other projects try to do a more grassroots fundraising where they try to distribute tokens. However, the current regulatory regime makes getting those tokens into a distributed token holder base close to impossible.
Okay, so then let's say you navigate through that. I'm going to let that hang for a second, and now let's shift into the issuance phase. Talk to me about how this is different than traditional securities. Kind of think about, let's maybe start with centralized intermediaries. Digital asset space, how does that play out?
So I think in the context of securities, it's usually thought of as a fundraising transaction, right? It's like some promoter wants to do a business, and then they raise capital from the public to go and do that business. In the context of crypto, the token issuances are largely permissionless and are usually intended, instead of for capital raising, to distribute the governance and the token holders to the token holder base.
In how is the recording different between securities and digital assets?
Well, most digital assets are native to a blockchain, right? So it's a entry on a ledger. Most securities today are, digital securities and custodied by big custodians like DTCC and reflected in brokerage accounts.
And then talk to me about how long the process can take in traditional securities and in digital assets.
Well, in traditional securities, it really depends on whether you're doing a registered offering or an exempt offering. A registered offering, which is commonly known as an IPO, is a close to a years-long process where an issuer would pay a firm like mine or Mrs. Smith's hundreds of thousands of dollars, maybe millions of dollars, and then fill out a form that refers to a bunch of other forms and includes voluminous disclosure, and then get that approved by the SEC. If you're doing an exempt offering, you can do that much quicker, usually a matter of a couple of weeks. In the context of crypto, that can be almost instantaneous and permissionless.
And so let's build on that then. Let's go to the next phase, if I can. I'll go to you, Ms. Smith. When we think about the secondary market, trade relying on dealers and brokers, digital assets relying on what, Ms. Smith?
So digital assets rely on either centralized platforms or decentralized protocols.
In how is the timing different between traditional securities and digital assets for those settlements to occur?
So as far as settlements go, most securities transactions settle on T+1 to the next day. Digital asset transactions typically settle immediately.
And what are the trading hours between digital assets and traditional securities?
Traditional securities trade, the markets are open from 9 to 5 in the US. Digital assets trade 24/7 globally.
And which is more opaque? Which provides more visibility, the traditional securities model or the digital asset model that's available on the blockchain?
Well, arguably, the digital assets model, which is available via the blockchain, as you stated in your question, would be more visible because you can view everything that's happening on the blockchain.
So I want to use this kind of as a stage setting. So what we're seeing is significant difference between traditional securities and digital assets, which builds on this need for a framework to be put in place from a legislative side. So let me come to you, Mr. Warwick, because you have a lot of experience in looking at some of these non-financial projects on the Polygon network. Briefly, can you just explain your thoughts on why a one-size-fits-all approach may not work? Your microphone may not be on.
Yeah, so many projects provide, for example, the ability to register and log the titles for real estate, abdicating or making it unnecessary to have title companies review title and make sure transfer is correct, or healthcare records or your own identification can all transfer on the blockchain.
Thank you very much. I think all of your testimony shows the need for market structure legislation from Congress. I now will yield to the gentleman, Mr. Lynch, the ranking member, for 5 minutes.